Hi guys, welcome back to BTSS. We are going to look at the in detail video about future value of present with regards to business, with regards to clients, with regards to projects, and with regards to client billing assets. This video is going to be a little lengthy video because this is something which I promised that I will give a in detail conceptual understanding about future value of present while doing the business valuation. So this video will be very useful for anybody who is actually are in the process of asking for investments. Okay, this is specifically the investment mode when it comes to pre-seed, venture capital, seed, or equity-based activities. Okay, predominantly debt-based activities may not go into this type of validations when it comes to businesses. As always, BTSS focuses on the concept. So sit back. Audio is important. Don't worry about my face. Don't worry about the lighting, etc. We give importance only to the concepts. We give importance to the content of why we are doing this. Okay, so specifically the future value of present. What is future value of present? While you are actually calculating any valuation of anything, let's say you are actually going to calculate the value of this particular product as a customer. If I'm using this today and if I'm probably going to use this let's say for 10 years, and then if I'm going to sell this pen to somebody else, okay, what would be the value of this particular pen after 10 years? This is from the customer's perspective. Okay, look into the same angle. If you are actually a business owner and you are going to either invest, you are an investor, or you are going to invest in some business which is going to produce a product like this, and then the manufacturer or the service owner is going to come and ask you for some kind of money, and he's going to say that this product is amazing, this is awesome, and this is going to probably rock the market, etc., etc. We as a startup owner, it is always nice to have extreme confidence in what we are doing. At the same time, if you are an investor, how is that you are going to understand it from the money perspective? Okay, so this is the investor angle. To make the investor happy, okay, you will have to work in a way that you will have to project your business in a way that the investor gets the holistic approach of what you are trying to say. All right, so this is the starting of future value of present when it comes to any kind of MCV. MCV is Master Corporate Valuation Report, MCV report. Okay, as in media metrics, we are into doing MCVs and assisting companies in MCV for more than 15 years. Okay, we have seen a wide variety of changes when it comes to how businesses being seen from the investor angle and how it is being seen at present. The valuation, the schemas which is being talked about today are all based on one of the things which is basically future value of present. There are various angles where we'll have to do the valuation report, and this is one angle which people tend to exaggerate a lot. Okay, so this is where I felt that it is very important for BTSS to come and probably explain our first-hand experience in how we can train you or we can guide you conceptually. I'm not going to exactly give you the formula how you are going to do it. That is not possible because every industry varies, every businesses vary. You are going to see how it is going to vary. Alright, so let us get into the topic. Future value of present. And what is that we are going to do? Future value of present of a business. When I am calling business, this includes everything: manufacturing, service sector, Alice service sector, and you put everything into this particular box. This is what I'm going to call it as business. Okay, future value of the current business. What are all the dependencies which you will have to look into it? The basic common ideas are: what is your nature of business? Okay, if your nature of business is going to be very primitive, and if your nature of business is going to be something which is probably a seasonal, and that too not into not reverberating into various years, then how are we going to calculate it? Okay, that is point number one. Point number two, what is the future potential of your particular business? Everybody will say that my future is extremely lucrative, extremely alarming, beautiful, all awesome, all those things. But what is the realistic preview of your business? Okay, is the current market going to adopt your business and then be your customer forever? Or the current market is going to adopt your business, and is the market going to push you to change your product into different versions? Or are you going to adopt this particular model, and are you going to push the market into a various denominated versions? I will give you a very small example so that you can understand. One example is, let's say, this pen or any technology product. The manufacturers push the market into varied angles. You and me are not asking for anything, like iPhone 14 is coming. You and me are not going to ask for iPhone 15. You and me are not going to ask for iPhone 16, but you and me know that definitely it is going to come, and they are going to probably give some kind of a feature which is going to be like wow, and then you are pushed to buy those things. Okay, number one. Number two, look at the similarity in the same case. Similarity in the same case. While this movement is going on, what is happening? The film-based cameras like Kodak, Konica are pushed to change into modern systems. If they adopt, they survive. If they do not adopt, they are gone. Who knows that Kodak could have imagined that if the market is going to crash like anything. Once upon a time, they may probably think that they are going to have forever customer. Okay, but it didn't happen. Okay. Similarly, the natural awareness of customer, we push products, companies, manufacturing companies into a different direction. Okay, once upon a time, people were pushing us towards the Western agenda. People were pushing us towards the chemical-based activities. But once the awareness of human beings increased, now even those companies are forced to bring into the angle of nature. Like a classic example, very extremely classic examples are your toothpaste industry, all your fairness, green-based activities in the industries. In today's context, people are talking about organic, people are talking about natural, everything. So they are forced to give all their products or most of their products into the organic or the natural category. So this is also one way where your future value of present also depends on it. So while we are calculating as a professional MCV reporting company, we take into all these considerations. Okay, will we be able to predict exactly what is going to happen after 5 years? No. Then how are we going to do that? We will probably be able to give you a 50 to 60% accurate prediction that the market is going to divert towards this many percentage into futuristic activity, which will be predictably positive for you or predictably negative for you. Okay, just a small thing, whatever that I am explaining, you will be getting it on the screen. Even if you are not getting it on the screen, don't worry. I have given the entire presentation in the slide share. Link is there. Just click on it, download it, and keep it with you. It will be extremely useful while you are doing your valuation for any type of funding. And if my video is very useful for you, please do not hesitate to come back and just give us a tap in the shoulder and say, hey, you did a good job. We'll be very happy to receive all the credits that is possible. And in case you have any negative comments also, please do share. So nobody is perfect. We will try to adopt and change towards that. Let's move forward. The next future value of present parameter which we are going to talk about is volume-based product services, or is it going to be niche product? When I am talking about niche, all the antiques, all the specialty products, all those things you can combine into the segment called niche. The volume based is, as the name says, number of customer increase, as and then the productization value of the particular product or services is going to be extremely small, and it is going to have an alarming beautiful number when the volume multiplies all those through. Okay, so finally, when all these products are ready, except for probably even there is a market segmentation problem, except for water and salt and anything which is in general, which is being used by everybody. No products can come and claim that their product can be used by everybody in the world. It is not possible. So your product will have a very specific customer for you. The specific customer, what I'm talking about, is your customer segment. Okay, when you're talking about customer segment, how are you going to handle the customer segment when it comes to hand activity? Example I will tell you. If your customer segment is going to be somewhere, let's say 75 years and above, current market style, current character attribution, current client persona, and the person who is actually having the 1960s and 70s of values, lifestyles, and behavioral dependencies, then your future value of present when it comes to your business may not be that lucrative. The reason is because there is a generation gap which is going to push you in a matter of another 5 years or 10 years, which is basically the previous generation of mine, which probably has seen television, which probably might have seen a black and white television, might probably have seen the first set of rock and roll videos, the first set of Western movies coming to India, or Indian movies going to, so their characters, their lifestyles are completely different. Okay, and if your product is going to be only focused on those people, maybe in another 15 years you're out of the market, because in those cases the next generation is going to come. I hope you will get the idea of what I'm trying to portray on it. So the future value of present is not one single value, as it is the reason why I'm coming to the exact definition which is being given in the entire internet portfolio. Is basically future value of present is defined as how much of money that you can get or by giving the same service to the same customer after X number of years. And specifically, everybody talk about the net profit, how much you are able to get. Ladies and gentlemen, please understand, according to me, I may be right, I may be wrong. The future value of present with regards to corporate valuation, specifically from the angle of investment deck or pitch deck, it doesn't depend on the net profit while you are doing the future value of present documentation. Let me also probably go to the next step. While you are doing the future value of present activity, you should also understand that the future value of present mainly targets your client segment. Okay, you can have brilliant concept, but if you do not have a customer, you are bankrupt or you are literally out of business. Okay, so while you are considering the future value of present calculation, the first parameters that you should consider, other than your business as such, is your customer, or is your client, or is your consumer. However, you are going to be based on what exactly is where exactly your market or services comes in. Okay, when it comes to the client, how are you going to define your client? Is the client is going to be an ad hoc client, or is the client is going to probably come in and then probably stay with you forever? Forever is a word which may not be that right to use, but for a very larger period of time. Can we probably say that a youth customer will stay up to his maybe 35, 38 years of age? When he enters into 25, and then you can hold him up to 35 or 38, well, something like that. Okay, maybe based on the activity, One extremely good example is your tobacco products. As long as the behavior is there with that particular person, maybe he will change from one brand to another brand. So it becomes a branding problem. It becomes a branding competition. But the market is still there. You can take the money out of his pocket for your particular services or the product. So how exactly are you going to define your customer? The client, we call it as client demography. Client demography is basically client persona. Who exactly is your customer? If you can, please understand this, it is very important. If you can put a lot of effort in describing the client persona right at the start of the business, it will be extremely easy for your marketing and sales team to exactly define the corporate communication to focus on that particular customer segmentation, and your sales team to approach and convert the businesses. On the other hand, it is also extremely clear from the investment point of view that the investor exactly sees that yes, these are the customers that he is targeting, and these are the customers who are willing to stay for a longer period. Please note that it does not mean that you need to have a customer for 50 years so the investor is going to come. Absolutely not. You can even go back and tell the investor saying, see, my business is active only for 6 months. Okay. And in this 6 months, you give me $1 million, I'll give you back $2.5 million. Like the profit is around $1.5 million. And then you work on this. It may sound like this is like a gamble, this is like a scam. Okay, there are businesses which can happen. There are some one-time trading activities which can give you this kind of a returns. Okay, that there can be one I can probably give you examples of all these specialty products which are bought in bulk, and it doesn't have a next year of production. Antique cars, for example, you buy it for X percentage and then you buy it and sell it for 2X, 3X. That's it. The transaction is over. More than that, it doesn't go through. So if you can understand it very clearly that it is not important that you need to have a product or service that can come and say that it will go for 50 years so that you can attract the investors. The investors are very clearly interested on where their money is going, how it is going to operate, will it work or not? If it works, how much it is going to make, and when it is making that money, how am I going to take my profits and go? Or will I be getting a chance to reinvest and stay with your company? As simple as this. As simple as this. Are you all with me now? So listen to me very carefully. So this pitch deck or investment presentation which you are creating to go and present with the investors, don't mistake. There are 99 out of 100 people making this mistake, saying that you will have to please the investor to say that this market is going to go on forever and ever and ever and ever. Okay, it doesn't need to be like that. It doesn't need to be like that. Okay, moving on to the next thing. Okay, most of the future value of present depends on the inflation index. Okay, I don't have to explain what inflation is about. Everybody knows what inflation is. So let me probably go and straight away talk about the client inflation index. Okay, what is the client inflation index? Does that mean that the inflation which is happening in the client's business is client inflation index? Not only that. This is where your internal parameters like your sales, marketing, your operational costs, all those things. See, example is very simple. Today, if you are able to get a customer, for example, you spend 100 rupees and you are able to get one customer. Okay, tomorrow this 100 rupees may not be sufficient for you to get the customer. Maybe this will be 1,000 rupees or a lakh of rupee or more than that, 1 million or more so. Okay, how are you going to calculate all those things? Is it directly dependent on the inflation of the other parameters? Absolutely not. In addition to other parameters, there is also a fictitious parameter, which is basically your client acquisition itself. Today, you will be able to put 50 resources at maybe $10. Okay, $10 an hour, and they will be working for 10 hours every day. Let's say this may not be the same. Maybe after let's say 5 years down the line, it can go reverse also. The client inflation index need not be increasing. The client inflation index maybe reducing. The negative inflation is also possible. So, ladies and gentlemen, it is very, very important to put your thought into all these things while you are doing the future value of present calculation. All right. So again, please, this is not the future value of present what auditors and accountants are doing. Okay. If somebody comes back and tell you that I did no need all those things, we have a formula, we have to just enter into it, and then that is extremely different. That is completely different. We are talking about future value of present calculations for the investment desk, purely from the functional area. This is not even from the financial area, purely from the functional area. Because this is where the investor invests. He is not investing in your numbers, which is being done basically on the balance sheet, trial balance, etc., etc. He is investing on your marketing data. He is investing on the future market segment data. He is investing on your future business value. So please understand that this is different from the other inflation index what you are trying to calculate. There are other factors when it comes to client, which is basically the billing type. There are many types of activities. Like example, in media metrics, we have different types of billing with the customers. We have yearly contracts, we have contracts, 5-year contracts, 3-year contracts, and ad hoc billing also, time and material billing also. All my training sessions, like if at all I'm coming to train your organization, if you want your sales and marketing team to be trained by me or like BTSS team, we charge you on an ad hoc basis, on the project basis. Like if we are going to come and train you for, let's say, 2 days, we are going to charge you some X amount of money. That's all. Okay. So if at all I'm going to probably come and say to my investor that you have hired me to train you today, so this means that you will hire me every year for X number of time for this many years. It need not happen. It need not happen. It may happen. It may probably happen more than what you and me are imagining, or it may never happen also. So that is also important when you're talking about future value of present. Okay. And overall, how the particular client is being viewed, how they are being acquired, and how they are being used. This is basically the client perspective of future value of business. Let's go to the product angle. The product angle is pretty straightforward. See, if you are looking at different versions of product to be, let's say, softwares or any product, phone, the product will remain, different versions will come. Okay, so obviously the valuation is going to be different. If the product as such is going to change, okay, which means whatever that I'm using right now, I'm going to throw it when it comes to the form, use, physical, and the phenomenon of the use, and then I'm going to probably completely change into something else. Example, radio. That radio box is no more used. I don't have it. Okay, and I'm probably, for a brief amount of period, I did not even use a radio. For a brief amount of period. I know some may probably come back and say that no, I am still listening to world radio, this and that. Where those people, fantastic. Okay, I'm talking about in generic. Okay, and then all these FM integrated videos are coming, all these things, people again started looking into the radio activities. And today, internet radio, podcasting, and all those things have taken a new shape is there. I am no more using the radio. I am no more using the radio in the form or phenomena in which I saw it before, but I am actually using it part of a different thing now. Part of a different thing now. I hope you will understand the difference. This is also important. If I'm going to come back and go to the investor and say, today I'm going to create a radio box. Why not? Why not? Disruption can happen anywhere, in any form. And if you're going to be novel about it, if there's going to be a new feature about it, why not? It is possible. Okay, but you will have to understand this different and bring this different in your calculation. Okay, let's go to the next. What is the nature of use of your product or services? Is it going to be need to have, like water, salt? Need to have. They need to have. Either they will have it they will have yours, or they will have someone else's, or they will have. Example is mineral water. Either they are going to drink it in the tap, or they are going to drink it in a bottle. If it is in a bottle, either they can drink yours or they can drink someone else's. But they are definitely going to drink it. So it's a need to have product. Which means that there is another product which is also there. All the makeup materials, beauty products, yeah, they will use, they may use, they may not also use. Okay. Some may use, some may never use. Some may use, but they will never use your product. Some may use your product, but they will not use it forever. Some may use your product, but they will probably have a different branding appeal on you. They don't like you. They will, instead of being a customer, they will probably be your market crusher. Somebody may not even use your product, but because of all the marketing activities that you are doing, they may probably give you on-air review, on-air approval, on-air recommendation, word of mouth. They can become your influencer. So I'm sure you're able to understand how big is this. So people like us, how much we get into the details, into every single activities, put our heads into, put hours and hours of research into it, and then come on the basic behavioral patterns, and then take the product valuation towards the investor. It may have volumes and volumes of paper, okay, but the investor is not going to come back and say, "Oh, why are you dumping me with papers?" No, he'll be extremely happy to see that. Oh, lovely! You have done so much of research. You know exactly what you're trying to do, and that's one of the market winners, ladies and gentlemen. That is a winner when it comes to investor. He may even not worry about whether he's going to get a profit or not. He is going to invest on a person who knows what he is doing, and he is committed to what he is doing, and he likes what he is doing. If you want to show that you are passionate about what you are doing, you better tell the investor that you are extremely passionate about it. The reason is because you have put on the time and you know everything about it. Are you going to be successful or not is different. Today, I know what I'm doing. I have put everything into it, and hence I know that I will be successful. Then effort is there, luck is there, and then the market response is there. That is a different parameter altogether. Okay, and then the final is, how is your product directly or indirectly dependent on the market differences. This particular point is very new, ladies and gentlemen. This is something which we had included after this COVID here, because the COVID has literally changed the entire dynamics of activity. Okay, some may probably say that it has disastrously took into a different turn. Some may probably, from the healthcare industries, from nowhere to a billionaires they have become, and from allied ancillary activities also is growing. On the other hand, there are a lot of millionaires and billionaires who are now investing in the startup scenario, who is probably trying to roll the wheel and then get the wheel rolling and then get the market also, dynamics is also running. How exactly is your product placed in this? Are you going to understand it very clearly? Probably not, because it is a new phenomenon. Some may be, some may not be. But this is something which you need to definitely have in your investment deck, because every investor is going to look for it. How are you going to adapt to the changes? Are you going to die? Are you going to survive? Are you going to probably survive and then be in ventilator? Or are you going to come out in a flying colors because you have already included that particular things also into the your calculation? This is when it comes to the product or services. Let's probably understand one more and then I will close the video. Or two more and then we'll close the video. Because as I said, I cannot give you the entire working, how we are working, how the Excel calculation is all about. That I cannot give you. But I can, now you will know that the angle in which you will have to think towards. Okay. As always, we are always there. If you want us to do your pitch deck investment documents, please come. We will have a discussion on it. Or if your team is going to do it and if you want us to advise on it, we'll be very happy to advise you on that also. We do all type of advisory services and also all type of consultancy services for all the startups, right? Specifically regards to valuation, audit, and our deep strength lies in marketing and sales. Okay, both in training and workshop. Alright, so let's go back to your money value. This is where everybody talks about when you are talking about future value of present. Money, future value of present. How today's 10 rupee is tomorrow's probably 100 rupees or 1000 rupees, etc. etc. Okay, I am not going to touch the money angle, how an auditor will look into it or an accountant will look into it, but I am going to touch the money angle from a strategic business consultant perspective. Okay, how a business strategy looks at the money. Okay, business strategy looking at money is from the start. You can probably look into the client billing activity. How are you billing? Very simple. I have a product, I have a shop, somebody is coming, buying and going. Okay, it's a one-time purchase, but it is still a billing. I'm going to call that as an ad hoc billing. Okay, you don't know the customer, or maybe you know the customer. He is coming with a requirement. You are satisfying the requirement. He is paying the money, and you are giving the product. Transaction is over. He may come, he may not come. Thank you very much. So that's one type of billing. Okay, so while you are doing the calculation of it, you cannot project to the investor that this particular customer or this particular client persona is going to come again and again and again and again, and then you're going to do it. That doesn't actually mean that somebody who is having a shop and doesn't know who the buyer is will not get investment. Absolutely not. Absolutely not. There comes a precedence where the product is important. Example, all your grocery shop. Forget about the relationship with the shop owner and the client. For the moment, we are not talking about that. Okay. Grocery shop, they need to live. To live, they need to eat. To eat, they need all your groceries. So no matter whether you are having a relationship with them or not, if you are around near to their house, they are going to come and buy. Okay, what are all the times that is possible? You may probably bill them on a monthly, quarterly, halfly, yearly, based on the contracts. We have all type of contracts, monthly, quarterly, halfly type of contracts, 3 years, 5 years contracts. If I am actually holding a 5-year contract with a specific set of value, and then there is an incremental adjustment of the value every year or probably once in 2 years, which is agreed on the first day itself, it's going to be an extremely lucrative option for the investor. There may be some other investor who may not be happy with this particular type of model also. The future value of the current business is going to be extremely steady if the billing is going to be extremely rock solid, and it is going to come no matter what. And when I'm saying no matter what, it doesn't mean that, like if the client business is going out of business, what we have to do, we have to cover that in the force majeure clause in our legal agreement. So, ladies and gentlemen, what I'm trying to say here is that it is not just one value straight away, put it in some Excel, give it to some accountant, and then he is going to calculate and say that today is 10 rupees and today is $10 and tomorrow it's going to be $1 million and the investor is going to take it. Absolutely not. He is going to question you, he is going to drill you into all these things. That is where I am trying to come in and help you, saying that you get all your details ready and then you go and say that today's $10 is going to be tomorrow's $10 million because of all these reasons, and he will be very happy to travel with you. Okay, next. What about the client growth? If the client is growing, if the billing is also growing, then there is a possibility that maybe your business is going to grow as along with the client is growing. Again, the possibility is that if the client growth is going to be in a double-digit number, and if your agreement or the dependency to the growth is going to be high, you will also grow in double digits. If the client is going to grow very fast, and then if he is going to look into you and say that, I have grown this much, but you are still a very small company, so I am not really comfortable with it. I am going to go with the Fortune 500 consulting companies. What will happen? These things has to be addressed also when you are looking at the future value of your business. Specifically, when you are asking for money, how far are you going to grow in this volatile market? Are you going to be saying that your money which is going to come into my company is going to be around 1.5x every year, and then there is going to be a buyback of 5x or 10x or whatever it is after 6 years, 7 years, whatever it is, no matter what, and then you are going to tell your investors saying that today this is what it is, and after say let's say 7 years you take a 10x value, and then the buyback is going to happen no matter what. Because of all these reasons, the investor will immediately be interested. The reason is because you know exactly what you're doing. Billing dependency. Are you the supplier? Are you the nice to have supplier? Are you the need to have supplier? Are you the bloodline of that particular client's industry? If you are the bloodline of that particular client's industry, no matter what, he cannot cut you off. That is also something which you need to work on it. And the textbook example, the textbook definition of future value of present is always talking about net profitability. An investor will also be very interested about to know about what is the net profitability of your company today, either conceptually or the FVP, or how it is going to go year on year. But he is not going to be worried about net profit as of today, but he is actually going to be worried about where your business is going to happen today. Ladies and gentlemen, please understand, profitability comes on a longer run, and if you are able to probably make a profit today and then increase the efficiency of your net profit as the year goes on and on, every investor is going to like it. Every investor doesn't come and say that today I want a 50% net profit. Not possible. So in some businesses, it is immediately possible in some businesses. Every business is different. Every business owner's vision is different. How they run a business is different. Same consulting company, how I run Media Metrics is different. How maybe somebody else comes and runs Media Metrics, they may probably run it in a different way. Similar companies like Media Metrics, they are run in a completely different way. Okay, it doesn't mean that they are wrong and I am right, or I am wrong and they are right. It's not that. So some investors may like my model, some investors may like their model. So what is important is explaining all these things and then putting all those things into your MCV report, and then you coming up with some certain value, and then that value goes into your equity accretion, and that becomes your EPS, and that is being projected for the investment either in the form of equity or in the form of venture capital or in the form of Series A, B, C or pre-seed also. So this is again a completely different understanding of how specifically how Indian businesses are doing the investment pitch documents nowadays. The reason why I'm talking specifically about Indian companies is because we are dealing with all of the Southeast Asian countries. The equity phenomenon, specifically from the startup segmentation, is not up to the level of understanding. Let's say if at all, if two startups started on the same day in Singapore and in India, the understanding of the equity nature of work is more in Singapore and less in India. The reason is because we have our own traditional system of following, and I'm not against it. It has worked wonderfully, and it will work wonderfully also. Okay, so this video is specifically talking about future value of present, and hence I am bound to say that in this context there is a difference in exposure. And finally, once all these things are done, as a marketing, sales and branding guy myself for more than 25 plus years, future value of present, one of the key factor is, are you able to convince the investor saying that you are going to become a predominant brand in the service or product that you are dealing with in a 5 years to 10 years period? Will you be able to get that additional maybe $2 a share or $3 a share based on the brand equity value which you can probably push for today? Is it possible? Of course it is possible. We have done it. How are you going to address that? It is if you are going to probably go on the McGregor model when it comes to the traditional branding activities, it may sound a little difficult. It may sound a little difficult, but practically you can build it in. We have done it, and we have all the reports what we have done successfully. We have got investments also based on the report. So you can take the traditional McGregor model and then probably adopt into the new age system of brand equity, brand awareness, brand loyalty, and the brand depth, segmentation, penetration, and then convert that into today's value. You do a future value calculation, and then you do a reverse regression and then bring it to today's value. You may be able to exert a little bit more. I'm not going to say that if you are able to bring a, let's say, $1 share, you're not going to make it $50. Not possible. Okay, but you'll be able to probably take 10 to 20 cents out of it, or maybe 50 cents out of it, or maybe $1 out of it. That is very important. It's not only that you'll have to work on the business angle of it, the customer angle of it. You should also work on the branding angle of it. Are you going to become an indispensable part of the market and economy when in the services and the products and services in which you are going to deal with after 5 years or 10 years? If your answer is going to be yes, what is your justification? And if there is a clear-cut justification, okay, you can do a reverse regression and then you can bring a current value, and using a SERPA model or wherever it is, you can bring what exactly is something which I can add today. And if you are able to do that, you may be able to get that extra 20-30 cents per share. And ladies and gentlemen, it's not a simple small value 20-30 cents. Okay, if you are able to push the valuation by 10-15%, that itself is an extremely huge number. People who have already got an exposure with regards to investments, you may already know how big I'm talking about. And is it possible? You would have already done it. I have done it. Many have done it. Some people may not know that this is possible. Okay, and how can you probably bring in the brand loyalty index into all those things? It's a very big subject. I don't want to go deep into that particular point because that will probably take another 1 hour time. But whatever that I have told is something. It's not imaginary. It's not something which I have just read in the books and then did something. This is something which we have done it in our MCV reports. We have done it for ourselves. We have done it for our clients. Okay, but most of the people who are looking into this video for the first time, I would probably like to tell you that, like as part of Media Metrics, we are in both the zones. We are also have investment. We are also investors. We are also MCV providers for many clients. Okay, and we are also business growth partners for many clients in both doing national, international marketing training workshops and also implementation of good processes. Okay, so whatever that I have told, I will try to put as much as possible in the screen. Okay, but don't worry, all the entire typed presentation is available in the slide share for download. I will give the link in the bottom. So in the description, you can take it, you can download it. If you have any doubts, as I always say, please come back. Just give me some time for me to reply back. And don't worry about if the doubt is going to make sense or doesn't make sense, because whatever that I am saying may not be the right 100%. I may be wrong also. If I am wrong, I would like to have an opportunity where you come and correct me also. Alright, so this is the broad understanding of future value of present conceptualization which I wanted to give you guys. This specifically comes the day when Singapore FinTech is happening. I'm extremely excited, just like how you guys are, if you're participating in that. Our team is there. I'm personally not there, but our representatives are there. Hopefully, our clients will have a wonderful session, and our clients will be able to bag a lot of money through investments. If you also have any doubts regarding investment adjustment or investment, how to get ready to get investors invest into your company, feel free to contact us. Feel free to let us know anything with regards to getting your marketing team ready, getting your corporate communication ready, getting your sales team ready, getting your sales team to become efficient. Let us know. We are there for you. We will try our best to support you as your business growth partner, and we will take your business internationally, and we will also bring all international brands to India also. So anything, if you want to know, you can visit our website www.mediametrics.in. I have given the link in the description also. So that's it for this particular video. I hope you got at least some information, some useful information, and you liked it. And if you like it, please spread the word. Subscribe to my channel. I'm happy that the channel is growing. I promise that as and when I'm able to seek some time out, I will put all useful videos. Subscribe to it. Thank you so much. I will see you all in the next video. Thank you very much. Take care.